Welcome to the very first episode of SpaceX Daily. Today is June 13th, 2026. SpaceX's $75 billion IPO at $135 per share hands public investors a direct stake in Starship reuse and Starlink cash flow, while locking in Musk's voting control. SpaceX Daily is the daily companion for following SpaceX, now that anyone can own a piece of it. Every weekday, we deliver the news with sources, what the community is buzzing about, one honest counterpoint, the engineering and economics behind the headlines, and the SPCX market picture. Subscribe so you never miss a day. SpaceX listed on the NASDAQ under ticker SPCX at $135 per share. The offering raised roughly $75 billion, the largest IPO in history, and valued the company near $1.8 trillion at pricing. Shares reached the high 160s intraday and closed around $161, up roughly 19%. The prospectus reported $18.7 billion of 2025 revenue, with Starlink supplying about two-thirds and already profitable, while the launch and Starship businesses remain loss-making. Proceeds will fund AI compute infrastructure, continued Starship development, and Starlink expansion. A dual-class share structure gives Elon Musk a controlling majority of voting power, and he sold no shares. With public markets now pricing both segments, we turn to the factory build-out meant to deliver the next revenue engine. SpaceX showed the Gigabay factory designed for 1,000 Starships per year. The facility was toured publicly for the first time, revealing tooling and floor space size for the production volume needed to support rapid reuse and orbital refueling demonstrations. Proceeds are earmarked for Starship development alongside AI infrastructure. Supply chain scale at this rate has never been executed before. While the factory targets that output, regulators still control how quickly the vehicles can fly. Gwynne Shotwell stated that Starship orbital flight pace depends on FAA approvals. The president noted that regulatory timelines remain the primary variable for the next series of test flights aimed at booster catch and refueling milestones. Next test flights target booster catch and refueling milestones. Even as test cadence is debated, Falcon 9 keeps demonstrating the reuse economics already funding everything else. Falcon 9 completed its 650th flight on the Starlink 1054 mission. The launch from Cape Canaveral carried 29 satellites and lifted the constellation total past 10,600. Block 5 boosters have now exceeded their original accounting life, directly supporting the annual launch rate ceiling the company is testing. That proven cash flow is exactly what analysts are questioning in today's valuation debate. Worth keeping an eye on is the Morningstar report that flags the IPO valuation as too high. Launch and Starship segments still operate at a loss. Revenue multiples assume scaling not yet shown in public filings. The first earnings report will be the key test. The same prospectus that drew that scrutiny also surfaces an entirely new orbital business line. Elon Musk outlined a plan for 1 million AI satellites. The proposal was presented alongside the IPO, tying future constellation growth to expanded compute capacity in orbit. The plan envisions orbital compute nodes that would expand the Starlink architecture into direct AI workloads. Musk described the satellites as a way to place processing power closer to users and reduce latency for training and inference tasks. The announcement coincided with the IPO pricing and referenced the same dual-class governance that keeps strategic decisions with the founder. Early estimates in the prospectus allocate part of the $75 billion raised to initial satellite prototypes and supporting ground stations. The 1 million figure exceeds the current Starlink target by roughly 2 orders of magnitude and would require production rates far above today's Falcon cadence. First spacecraft are targeted for launch as early as next year. Ground-based astronomers are already flagging one downside of that plan. Astronomers raise concerns over planned orbital data center satellites. SpaceX is preparing to launch the first such spacecraft as early as next year. Ground-based observers warn the satellites could create persistent streaks that interfere with telescope data collection. The concern centers on reflected sunlight from large arrays creating linear artifacts across wide-field survey images. Observatories such as the Vera C. Rubin Observatory have already modeled similar interference from existing Starlink shells and expect data loss rates to rise with each new constellation layer. Early launches are planned for 2026. On a lighter operational note, SpaceX is adding a new support aircraft at its launch sites. SpaceX bought a Bell 429 helicopter for launch site operations. The aircraft will support range safety and recovery tasks at Starbase and Cape Canaveral as flight cadence increases. The Bell 429 is a twin-engine light helicopter certified for single-pilot instrument flight rules operations. Acquisition records show the purchase closed in the second quarter of 2026, with delivery expected before the end of the year. The helicopter joins a fleet that already includes 2 older models used for payload security and booster inspection flights. Range safety officers have noted that faster aerial response times become critical once Starship test flights move to a weekly cadence. Finally, a quick look at how the community marked the listing day. On the market side, SPCX is at $160.95, up 19.2% versus the previous close. The dual-class structure and Musk's retained voting control are now disclosed governance facts for every shareholder. The prospectus also made public that launch operations still operate at a loss, while Starlink generates the majority of revenue and profit. On SpaceX users shared photos and video of the IPO day Starlink launch from Florida. The launch thread collected more than 3,000 comments within the first hour after liftoff. Users noted that the timing of the Starlink 1054 mission with the NASDAQ bell created a visible on-ramp from private to public ownership. r/SpaceX posters debated how the $75 billion proceeds could accelerate Starship hardware builds beyond current tooling limits. Several top comments focused on whether the capital would first go to additional Raptor test stands or to parallel tank production lines at Starbase. Collect Space reported that SpaceX released limited edition mission patches marking the public listing. The patches feature the SPCX ticker and the date, June 12, 2026. And were distributed to employees and select investors. Secondary market listings appeared on eBay within hours at multiples of the original issue price. Apparently imagined the first day deal made by an identical white, a $17.5 million. SpaceX members posted a short cinematic film of a recent Falcon 9 ascent captured from the ground. The video used stabilized long lens footage and color graded the plume to highlight the booster's re-entry burn sequence. The post received over 100,000 views in the first day and was cross-shared on X by several SpaceX engineers. LinkedIn clips of Musk's IPO event remarks on the company's original low odds of success are circulating in the community. Musk recalled giving SpaceX less than a 10% chance of success in early days. At the IPO event, he reiterated the long-term goal of making humanity multiplanetary, framing the public listing as a new phase of that mission. One clip excerpted his comment that the probability assessment came from the period immediately after the third Falcon 1 failure. The remarks were paired with side-by-side images of the first Falcon 1 launch and today's Starship test article. One thing worth watching is how the first earnings report clarifies margins on the launch side. The engineering angle shows that Starlink already covers 2/3 of revenue and is profitable, while the launch business subsidizes Starship development at a loss. This split shows how reuse economics on Falcon 9, now past 650 flights, generate the cash that funds the next architecture. Public markets will therefore price the company on quarterly subscriber adds and booster turnaround times. Reaching 1,000 Starships per year at Gigabay requires a closed-loop supply chain for engines, tanks, and avionics that has never been executed at that rate. Orbital refueling remains the gating item for any revenue beyond low Earth orbit. Yet the dual-class structure means the timeline is set internally rather than by quarterly earnings pressure. Before we go, watch for the first quarterly filing that will give the initial public look at subscriber growth and booster turn times. That's your SpaceX news for today. SPCX closed at $160.95, up 19.2%. If the show saves you time, a rating or review on Apple Podcast or Spotify genuinely helps new listeners find it. I'm Patrick in Vancouver. Thanks for listening. See you tomorrow. And before you go, this show is part of the Narrow Network, a family of daily podcasts covering tech, science, markets, and more. If you enjoyed today's episode, give Modern Investing Techniques a listen. Modern strategies for Canadian and U.S. investors. You can explore the whole lineup at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.